Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, March the 15th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. We've got across the pond, not a whole lot to see. Again, pretty light week for the most part, but here back to the United States, we did get a couple of things here where we got core CPI, core retail sales coming in at 0.1%, expected to be 0.7%. They did revise last month's number up only by 0.1%, so not making up for the headline number there. So we move on to retail sales. Remember, core retail sales strips out autos and some of the more volatile aspects of that number. And then we got retail sales coming in at negative 0.2%, expected to be a positive 0.2%. Again, revision to last month's number up by 0.1%, but not making up for the headline number. That caused the overall equities to start coming off. We were seeing some overnight weakness. This accelerated that to the downside. This tariff increase to 25% is really weighing on the overall equities. Now, we did see a tweet out a little bit earlier today from Trump, and he basically said that the tariffs on the autos was going to be held off for another 6 months. That's given us a little bit of life in the equities as we're starting to see an upward turn there. Then also in business inventories, we got unchanged, which was expected, and the National Association of Home Builders Housing Market Index came in at 66, expected to be 64. Anything above 50 is expansion in the economy. And finally, we got crude oil inventories as an increase of 5.4 million barrels. Remember, last month was one of the first time we've seen a drawdown, and now we're seeing that build. Last month it was a drawdown of 5 million barrels. Now we're seeing that build come in. It was supposed to be unchanged and beat the street by almost 5.5 million barrels. Should cause crude oil to come off a little bit. That is an indication that the overall economy isn't maybe doing as well as we were expecting. All right, so heading into the summer, we do see a little bit lighter usage of crude oil, but this is a little bit ahead of that in a sense. So we're going to have to keep an eye on that. All right, moving on to the overall markets, we've got crude oil up about 35 cents. We would expect some of that to weigh on this market with the 5 million barrel build. Again, that's been a pretty consistent story that we're seeing builds in this crude oil, which is indicating more of a lack of demand there. All right, then we go over to gold futures. They're coming off a little bit, again, flight to safety. As the equities were coming off, we were seeing gold move higher. Now, with this tweet that we're going to hold off on the tariffs on the cars for another 6 months, that's given a little bit of life to the equities and people pulling money out of gold futures here. So we can see gold is higher, but not able to sustain a move above that 1300 psychological level that we've been talking about. I've talked about this time and time again. I think it's going to settle in and around this 1300, but just slightly below that, because that's where we see this point of control lining up for the equities. All right, hope I didn't crash anything there. All right, and then on to bond futures. Again, showing interest rates are going to go lower throughout the year or going forward. We're not seeing anything indicating that interest rates are going to go higher. I think we're going to stay here for the remainder of 2019 right here where the Fed fund rate is. I don't think we're going to increase or decrease interest rates. I think they're going to let these interest rate hikes that we've seen over the last year or so come into the market and meld a little bit to see how things are working out. Then we go over to the VIX. VIX, again, was spiking this morning when we were seeing the equities come off, but now with that tariff tweet being held off for the autos for 6 months, that's kind of giving life to the equities, as you can see with the Dow Jones up 100 points on the day right now, moving up and away from that point of control. If we take a look at the NASDAQ, again, another big solid move, up 77 points. Breaking away from that point of control and above this Fibonacci area of 74.50 that we've been talking about. That's the line in the sand that the bulls and bears are going to be fighting over here. And we're seeing that right now. You can see we kind of started out right below that, but the market sold off on the open, and we have seen the market on, and we'll see this show up a little bit better when we break down this into the daily chart. But you can see earlier in the morning we were selling off, and then that tweet came out and we started moving higher there. So a settlement above this 74.50 area is going to be a place where the bulls think that they have the advantage here because of the Fibonacci's the way we have them lined up. I'm saying that we could see this market easily pop back and forth. I think that this line here is going to kind of become a little bit ambiguous, where it's not really showing a line in the sand as to support and resistance because it lines up so closely with this point of control. We could easily see that, thinking that we are getting above that, but I think that the market is going to be able to peel through that Fibonacci of 74.50 a little bit easier the more we start trading in and around that, and the more that that point of control lines up with that market. All right, on to the mini S&Ps. They're up 12 points and above their Fibonacci of that 28.33. That isn't that will act, I should say, more as a support and resistance than what we were seeing over there in the NASDAQ, because the NASDAQ's point of control lines up so closely to that Fibonacci that the magnet will cause it to peel back and forth between those. All right, so the 28.33 area, this line right here for E-mini S&P is 28.33, is going to be that support and resistance. It's going to act as support now that we're above it. All right, so keep your eyes out for that. Anything settling back in here, again, we could see it just kind of peeling back and forth in between those areas. Let's take a look at the breakdown on the E-mini S&Ps. All right, so what we were looking at overnight, excuse me, you see late in the day we got that bit of a sell-off to the lows, but overnight inventory, you know, was pretty neutral for the most part heading into the early morning. Before the open here, you can see they flushed out, sold off to the lows right here, and here is where the tweet went out on the tariffs, okay? So right there, and that's been the catalyst for the move higher in equities. So we've seen this across the board with the NASDAQ, the E-mini S&Ps, and across the board in all equities for the most part. I could just go through and name them all probably, but we saw that as soon as that tweet went out right after the open, we saw the market start to move higher. All right, that's all I got for you guys, other than if you can't take that, take it easy.